Hello, hello, and happy Monday. Welcome to another Money Monday with Purse Strings. My name is Maggie Nielsen, and I am here, part of Purse Strings, where we are all about providing financial education for women. And then we have a list of vetted financial professionals who are willing, ready, and able to serve our female market. We call those our Purse Strings approved professionals, and Kelly here is one of them. So before we dive into all our fun today about ESG and SRI, and we'll define those words as well, Kelly, could you give a little intro of who you are and what you do?
Be glad to, Maggie. Thank you. And thanks for everybody joining. I'm Kelly Guncheon. I'm a certified financial planner. I own a small registered investment advisory firm in Plymouth, Minnesota, which is just on the outskirts of Minneapolis. I specialize in socially responsible investments as well as investing for women and investing in women. I try to attract women into our profession because I think they're perfectly suited for the type of work that we do.
Yeah, they definitely are. I know a lot of people hiring in that area if anyone is looking for jobs. But today we are here to talk about socially conscious investing. And I know you have some slides that you're going to share, and then we're always willing to take questions if anyone has them throughout the presentation. Just pop them in the chat. But Kelly recently came back from the latest conference about environmental social conscious investing. So he just wants to bring some of the latest and greatest information to us right when he gets back from the conference.
That's right. Thanks, Maggie. Yes, and I wanted to, I do have a bit of a PowerPoint presentation. I wanted to walk the line between those who are familiar with socially responsible investments and those that are not, and try to give a little brief background about SRI, ESG, then talk about some of the latest trends in SRI, ESG, which are those initials will become familiar with to you during the course of the presentation. So if you don't mind, I'm going to start with the slide presentation.
Yeah, sounds great.
Okay. Well, this is I'm talking about SRI ESG, and SRI is socially responsible investments. It's kind of the traditional name for SRI for SRI ESG. ESG is a later evolution in the name, and I'll talk with you a little bit about that in a little bit. But socially responsible investing, essentially, sorry, I'm not getting the. Are you seeing this? Okay, I apologize.
Yep, we see your slide. You're still on the first slide.
I'm still on the first slide. Okay. And I'm sorry, I
got lost in the screens.
Yeah, I'm not sure why it's not gone. There we go.
There we go.
All right. So SRI, social responsible investing, has been around for centuries, really, starting with Judaic law and through Native American and indigenous tribe customs of investing in the future. It really came to being in the investment world, that investment world being stocks and the like, back in the 70s when South Africa had the apartheid control of the country, and institutional investors, primarily colleges, universities, but later on fund companies as well, introduced a boycott of South Africa until they changed their ways. And it became clear that it was going to work once in February of 1990, they elected, or Nelson Mandela was released from prison, and apartheid ended in South Africa. So it was clear that this type of approach to choking off money in the form of investments to a country could bring about reform in a government system. And so that has been continued over the years in various forms. It was legitimized further by the UN back in 2006 when it introduced its principles for responsible investment. And that included talking about the environment, the treatment, the human rights treatment throughout the world and the like, as being elements that ought to be considered before you invest money. So the initial stages of SRI were primarily negative, that it was about going against a country, going against tobacco, going against military weapons and the like. And it has grown significantly since then, so that as of the end of 2020, which is the most recent data we have, the total assets invested in SRI is a little over $17 trillion. We have numerous mutual funds that focus on ESG and SRI, and 1 out of every $3 invested in the U.S. is invested in some way in socially responsible investments. Now, socially, as I mentioned, the evolution of the term SRI, it began with negative investing, negative screening. Again, tobacco, alcohol. There are faith-based screening criteria for SRI, so it eliminates alcohol, it eliminates pornography and the like. It's expanded to environment and social and governance investing, and those things are certainly from the environment and social and governance investing. There's also negative screening, so you're not investing in oil companies or fossil fuel companies with companies that violate human rights and all. But there's also positive screening, and I'm going to talk about that in a minute. Positive screening varying from discounting those companies or not investing in those companies that are not socially responsible, but turning around and investing in those that are socially responsible intentionally to reward them for their corporate behaviors. There's also shareholder advocacy and what's called impact investing. Shareholder advocacy is when you are a stockholder in a company, you can use your vote as a stockholder to try to effect positive change in the behavior of a company. And it's proven to be very effective. And I'll mention some of the successes that shareholder advocacy has realized over in the past year. And then impact investing. Impact investing is more granular type of investing where you invest in local communities, whether it be through a community development bank, through a funding source for small businesses that are working in depressed areas of a city or municipalities. So it really has branched out into several areas, more than just the negative screening it was before. So the ESG, the environmental, includes clean energy, renewables, water. These are things that are both negative and positive. The positive being that of late, ESG investors will invest in alternative energies. They'll invest in funds that will invest in companies that deal with water preservation and recycling. They'll invest in companies that will provide financing to construction and engineering firms that commit to alternative energy as the power source for the projects they're working on. That's the type of positive environmental ESG and SRI that's going on. Social is human capital, whether it be animal experimentation, the representation of women and minorities on boards of directors and in management, or how corporations treat and deal with local communities. And then finally, government and industry practices as part of the governance section of ESG. By that, I mean it will avoid government, primarily internationally, governments that are violating human rights. The industry practices are more along the lines of, again, the prevalence of women and minorities in management positions and how they treat employees in general. So with all that behind me, I wanted to talk as the basis for explaining what SRI ESG is. I wanted to get into the 3 trends that I saw last week. I was in Colorado Springs for a meeting of socially responsible investment advisors. We have an annual meeting at which we talk about a variety of things that are going on in the industry. And the one that probably the overriding concern or interest was in the area of greenwashing. Now, greenwashing is essentially, it's like whitewashing, except it's the use of environment to wash over the practices of a company. And in this case, it's the greenwashing is both the companies such as fossil fuel companies that will have a statement about environment or sustainable communities on their websites when in fact their practices are doing quite the opposite of what they suggest. It's become quite commonplace for public corporations to have statements about sustainability or the environment and the like. And that's actually, despite the fact that some of those statements are essentially greenwashing. The fact that they have those statements is a very good sign, because it means that they are paying attention. They understand that people are concerned about the environment. They're concerned about sustainability. They're concerned about the effects on communities and resources, natural resources. So the fact that they're paying attention is a good sign in and of itself. The concern lies with the greenwashing. That is, in the financial world and the investments world, the greenwashing lies in two ways, in two areas. One is mutual funds, and this has been going on for quite some time. And I'll give you an example in a minute. The more recent one, though, is financial companies that both banks as well as investment companies and financial services companies have started to tout ESG and SRI as part of their corporate culture. And they've done it because of the numbers that I showed you before, that so much money is now being invested in an ESG or SRI way that they want to gather those assets. So it's not necessarily that they believe in social responsibility or ESG type of investing. It's they want to gather those assets. And so it's raised the specter of there being greenwashing actually in the investment community. And what that has caused is the SEC, which regulates most financial services company, is starting to crack down on ESG. And by that, I mean that they're actually doing audits of financial advisory firms and mutual funds to have essentially say, show us your homework, show us what you're doing to ensure that what you're saying is ESG is actually ESG. And there are a couple of financial firms that went through an audit just recently with the SEC, and it was pretty frightening, quite frankly. It was so detail oriented, essentially saying, show us how you reached the conclusion that these mutual funds or other investment opportunities that you're showing are actually ESG, that truly are promoting the environment, protecting the environment, and working on social and governance reform. Quite elaborate, and it's an effort that came ironically from the anti-ESG movement. That is that, and I'll get to that in a second. But there are government officials who are fighting ESG in part because their constituencies include fossil fuel company employees and fossil fuel companies. So they are really cracking down on ESG in general. And an offshoot of that is the SEC has taken upon itself to look at ESG in earnest because of this political climate, as well as the substantial increase in financial firms that are getting into ESG. So
to jump in with you here, this greenwashing is news to me, and we even have another Facebook user saying how it's news to them as well. Something we've never heard of. And it's very interesting because a lot of people wonder, how vetted are these investments of, being eco-friendly or being sustainable or things like that. Like, granted, it's just not tobacco and alcohol. So does that just make it ESG, which is a no. And so it's just interesting hearing that and having that come up, because of course people want to go where the money is, and they'll say whatever they need to say sometimes just to get that money. And so it's interesting how the SEC now is really stepping in and making sure things are thorough and those are really being investigated or, really earning that ESG title.
Yeah, well, that's a really good question that was posed, and good context that you provided, Maggie. Because the interesting thing about ESG is that it means different things to different people, and that's one of the things that the SEC is looking at. Is so what does it mean to you? Because they have no definition for it.
Mhm.
And that's what makes it challenging for us. But I think that they're just trying to feel their way through it. And thus far the audits they've done have not been antagonistic. They're not been contesting anything. They're just exploring. So
Right.
they're very in depth. But ESG, I mean, one of the things they look at is, so how do you determine whether an investor is interested in ESG, and what about ESG are they attracted to? And so we, as a practice, we being ESG SRI advisors, as a practice, one of the first conversations we have with a client is, are you interested in it, and what does it mean to you? Because
Mhm.
it could be faith-based, it could be simply, I don't want to invest in tobacco, or I
Mhm.
don't want to invest in military weapons, or it could be any number of things. It doesn't mean everything. It doesn't mean environment. It doesn't mean water. It doesn't mean military weapons. It doesn't mean pornography or abortion or any of that. So you have to ask that question as
Yeah.
to, okay, what's your real concern? And then you match up to that investor those funds that you think do a decent job of working on those particular interests. And the second challenge that we have is that there really is no one uh, uh, yardstick for
Mhm.
measuring what ESG is. So there are various. Morningstar is a company out of Chicago that does a lot of investment data analysis, and they have their own yardstick. And there are several other firms that are developing or have developed a yardstick by which they measure ESG. So it's part of the challenge of being an industry or a sector of the industry that still is in its infancy and trying to feel its way through. But in fact, I think this gives you an example where our challenge lies. This is kind of the evolution of terms that are used over the years for ESG. And any number of these things can be used as a euphemism for ESG or SRI. And so that, rather than being a big umbrella, it's a big hodgepodge of things that can lead to more confusion than clarity, which is one of the challenges that we face.
Yeah, those are a lot of titles under there, so I can see how that gets very confusing.
Right. It is very confusing for just about everybody. And so that's what we've been dealing with. And one of the, as I mentioned before, in addition to the financial firms that are getting into ESG, for quite some time now, the mutual funds have been going that direction as well. And it's interesting. I got into this because a client of mine is an earth sciences professor at a local college. And she and I met the day after she had met with the advisor from their 403B plan. And she had asked that advisor about SRI investing. And that advisor had said, well, you can't make money that way. And she said, no, you don't understand. I don't want to invest in something that is working against my life's work. So she met with me the next day and asked me that same question. I didn't know anything about it. I said, I'll look into it. And I looked into it. It's like, this is exactly what I'd like to do because it matches up with my values. And what was interesting is that the fund company that ran the 403B plan, runs a lot of the secondary education institutions, had two funds. They had two what they called social funds. There was an equity fund, which was a stock fund, and then there was a social bond fund. And the social bond fund was fine, it invested in municipalities and the like. But the social equity fund, the one that invested in stocks, not only was investing in fossil fuel companies, but they were investing in coal mines, which is something, and Philip Morris. So the only thing I could figure out that was social about it was that they may have gotten together for drinks on Friday nights. I don't know, but there was something about it that didn't ring true, and that still is the case today. And I'll give you just one example briefly, but this is a DFA U.S. Social Core Mutual Fund, and this is a Morningstar report. It's hard to see, and this is from many years ago. They since have kind of cleaned up their act. But this is a Morningstar report that gives all kinds of data about particular mutual funds, and this is again a social core fund, and its top holding was ExxonMobil, and its fifth largest holding was Chevron, and you can't call a mutual fund that has holdings in fossil fuel companies necessarily ESG or SRI. So that's an example of what we've been dealing with in the investment community when it comes to greenwashing that mutual funds participate in, and it still goes on today.
And so a different question that somebody else, wrote in is, how can an investor really know the validity of ESG?
That's a very good question. I mean, we have to rely on the people who do this for a living. Uh,
Mhm.
there are fund companies and there are consulting companies that work on ESG. There's an organization called USIF, USSIF, which is the USIF doesn't stand for anything. I wish I could remember the original name of the organization, but that they have courses on ESG for advisors to use. So there are numerous organizations out there that are trying to really fine tune the definition of what ESG investments are.
Mhm.
There's no tried and true definition of ESG as we've seen before, but it's not like it's going to be perfect ever, but it's getting much better. You can tell, a fossil fuel company, their corporate mission is to invest in fossil fuels, and fossil fuels, by definition, are not environmentally friendly. And so, for a fossil fuel company to be part of an ESG mutual fund seems nearly impossible. I won't say that it's impossible, but it's nearly impossible unless they make a commitment to go with alternative energies. So those things are pretty clear cut. But there are other companies. There's Apple, for example. Their supply chain. They seem to be environmentally responsible, but their supply chain has some human rights issues.
Mhm.
So it's not a pure science at this point. It's more of an art, but it's working toward. What we try to do is we don't try to be perfect because we know we're not going to get there, but we try to do as best we can.
Yep, it's fair. Totally
Okay,
understand that.
great. So the second thing that we're dealing with is the anti-ESG movement. And I mentioned to you this has been coming about from states that are essentially, what they're doing is they prohibited their pensions, the government pensions and other investment programs, to invest in mutual funds that exclude fossil fuel companies. Texas and Florida are the two that have done this, and it's unfortunate. It's somewhat understandable. How it's legal, I'm not sure, because they are doing exactly what they accuse the ESG movement of doing, which is to exclude something simply exclude something from an investment standpoint simply because of its culture or its purpose. And the ESG movement does not ignore returns. I mean,
Mhm.
you can make a lot of money, as much money, if not more so, with ESG investments as you can with non-ESG investments. It's more difficult these days because fossil fuel oil companies are making record profits. So when you're excluding fossil fuel companies, which is really the leader by far in return on investment this past year, it's hard to compete with the non-ESG mutual funds. But the year before, the ESG funds did better than non-ESG funds. So
Wow.
there's no certainty in the arena, to be sure. And then finally, I wanted to bring up shareholder activism. Shareholder activism, again, is when shareholders, because of the fact that they own a piece of a company, they can go to the annual meeting of a company and put forth a resolution that can change the practices of that organization, of that company. And it can be very effective. And I wanted to bring up one of the examples of how effective that can be. Um, you give me a second. Here we go. So one of the most active fund companies is Green Century Funds. And what they do is, so the way that a shareholder activist company operates, they also have a couple of mutual funds that are very good. that are green, obviously. But they do a lot of with their profits. They do a lot of shareholder activism. What they do is they gather votes from the people who invest in their companies, and they gather those votes, and then they're able to go with a substantial number of votes to a shareholder meeting and put forth resolutions that to change the way that the company operates. And typically when they do that, they'll have a meeting with management before the shareholder meeting, because management would rather they don't bring up this stuff during a shareholder meeting, because they know that sometimes it can get out of control. So they can be very persuasive with the votes in tow, meeting with management. And sometimes it has to go to a vote for the shareholders. But they've done some really good work for many years. Just recently, this is from the 2021-22 Chevron. One of the biggest accomplishments they've had, and they can't really claim sole responsibility for this, but Chevron abandoned its effort or its plans to drill in the National Wildlife Refuge. There are a number of reasons they did that, but the Green Century had filed an initial proposal asking them to renounce it, and they did it, but for other reasons as well. They announced that they've been working with Coca-Cola, which is the largest polluter with plastic in the world by far. And Coke recently announced that it's going to cut its use of plastic up to 25% of its bottling in the world by 2030. And then they have other. They were successful years ago at convincing Kellogg to abandon its use of palm oil from unsustainable forests, which has been a tremendous success because it's preserved sustainable forestry in South America. And then there are other things that they have done over the past just couple of years. Apple, this one's interesting, that they proposed a resolution that would require Apple to provide spare parts and instruction manuals for people to do their own repair work. In November 2021, Apple did that. It's not a direct result of a shareholder proposal, but rather came from after discussions that they had with Apple management, and that there was going to be a law that was going to be introduced, and Apple decided to take it unto itself. So these are just a handful of some of the shareholder activism work that I'm actually. Yeah, there we go. So that they've been involved with. So I didn't actually show you that screen. I apologize. Sorry, I had intended to show you the screen that had all the information on it. So in short, these are the trends that we're seeing in the ESG SRI world that are helping to improve what we're doing, but also raising more questions for us and more challenges for us.
I think this has been a ton of great information, very interesting. And somebody commented, I hear shareholder activism is possible to make changes, which is exactly what you shared, which is exciting to see. And also how you mentioned that usually the returns are equal as any other investments, which is, used to not be the case. And so I know sometimes ESG SRI holds a bad case because of that, but now it definitely is comparable on returns, which is more exciting when you invest, how you can really invest with your beliefs or whatever is most passionate to you.
Yeah. Well, it's and I'll tell you that it used to be that ESG investing was more difficult because of, here's the information I was going to present to you. It was more difficult because there are fewer opportunities to do it. And when you have fewer opportunities to invest, it makes your investments a lot more volatile. If you invest in 3 companies and 2 of them are not doing well, your portfolio is going to suffer. But if you're invested in 200, 300 companies and 100 of them are not doing well, you still have a really good opportunity to do well in that portfolio because you've spread out the risk. Now that more and more companies are paying attention to ESG, there are many more opportunities, and that there are more mutual funds to invest in dealing with ESG, the volatility is a lot less than it used to be, and the opportunities are far greater.
Yeah, that makes a lot of sense.
Yeah, this is the Green Century Fund's highlights of their shareholder advocacy season. I was mentioning to you Chevron, Coca-Cola, Lowe's, Kroger, and Mattel, Apple, McDonald's. You can go to their website and find out more about what they're doing. And as I mentioned, there are several companies that are involved with shareholder advocacy that are doing some really great work.
That's awesome. That's very interesting. So I thank you to going to the conference and bringing back this great information to us, so we can be in the know with everybody else. I think it's been a ton of great information today, just for those who have never even thought about ESG, SRI, didn't know what those initials meant, to those of us who are still just trying to, learn a little bit more and get into the know. Are there any last tips, tricks, or anything else you want to make sure you share with our audience today?
Well, first of all, thank you again for the invitation, and thanks to
Of course.
everybody who participated. I guess the tip is just, if you're interested in ensuring that your values align with your investments and vice versa, you can do a lot of research online with the companies or the mutual funds that you're planning on investing in. You can see quite readily the companies that mutual funds invest in. Don't take the word social or ESG or anything for granted, and don't just assume that it is investing the way that you think it's going to invest, and think about what it is you're going to invest in, because there are some funds that may not get a high rating on the environmental because that's not their thing, but they may be working on other parts of ESG. Or sometimes you invest in a company to reward it for some of the behaviors it's starting to form and it's starting to build. So that's a good reason to invest. The last thing I should mention, though, is that there is certainly gender equity is a huge part of the whole the SRI movement, much needed. There is a fund, and I'm not going to recommend it per se because I don't know what people's interests are, but it's well worth looking at because it's the first fund that really focused on women and ensuring that women are in management and governance, that there's a proper representation of women in the company. It's called Elevate, ELLEVATE. And it is Pax World is the company that has that mutual fund. It's been around for 6-7 years, something like that. It's done okay, but it's something that given the interest of this group, I thought I mentioned as something to look into, because I think it's, for me, it's well worth supporting. I try to put all my clients into it right away, not because it does terrific, but because the philosophy is that companies will do better the more women are in upper management and on the boards of directors, and I couldn't agree with that more, quite frankly. So I'll give it a plug.
Awesome. Well, we appreciate that. It's very interesting that, how well you can put your money where your mouth is and things like that these days. So if anyone has any more questions or they're interested in doing some ESG investing, you could always reach out to Kelly. His email has been going through the bottom the whole time. He's also one of our Purse Strings approved professionals, so you can reach out to him on our site, pursestrings.co.
Bless you. Poor kid. Sorry.
It is what it is. 'Tis the season. But that is all that we have for today. We'll be back next week for another Money Monday. So until then, enjoy your Halloween.
Same to you.
All right. Thank you. Bye.
Bye now.